What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. The weekend is here, but we got to get through the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And this week, we had earnings from Amazon, earnings from Apple, earnings from Google, but the biggest winner was the stock that we always start things off with, and that is Meta Platforms. This stock started the week at 150, and then after reporting their earnings, the stock literally rocketed higher, over 24% increase, including a decline. Yeah, the stock actually went down today, 1.2% to finish the week at 186.50. Again, up 24% in 1 week. Just incredible. Now, the Q4 earnings came in. We've done videos on all of these companies outside of NVIDIA, which reports their earnings in about 2 weeks' time. So we won't go through the minutia of the numbers. But look, you had relatively strong revenue. They beat expectations. It was a decline on that revenue year over year. But the two major things that we saw out of Meta this week that I think had the biggest impact on the stock going up is, number one, you had the $40 billion buyback, which at the time was announced, the company was about a $400 billion market cap. So roughly 10% of the market cap being pledged as a buyback. Yeah, that's going to surge your stock higher. On top of that, we've got Q1 guidance, which was not quite above consensus, but was good enough. And I think that certainly appeased some investors, but probably more importantly, the company walked back their total expenditures, which I think they've actually done for 2 consecutive quarters. And I could be wrong about this, but it seems to me the company kind of set a target and has just been kind of walking that back. So the revenues for the full year, at least in the first quarter, is what we got guidance into. But I think if the first quarter is decent for Meta, you would assume Q2, Q3, Q4 are going to be in a range. So your revenue is probably going to be slightly better than expected or hold up relatively well. You're going to walk back the expenses. You're going to walk back CapEx, and you're going to potentially, they're probably not going to do a $40 billion buyback over the next year or so, or 12 months, but they're going to buy back a boatload of the stock. That was just a recipe for the stock heading higher. Shows that Mark has a little bit of sense of how Wall Street works. He obviously did not do a good job over the last year. Again, the stock is still down despite the rapid rise in the share price today. Over the last year, this stock is still down 42%. If Mark never went on that crazy Groggle VR trip, this stock would probably, I think, maybe even be up over the last year. So there's still a lot of damage to be done, but Mark is starting to repair that. Now, again, the stock jumped 22% as the company really highlighted on their conference call, this is the year of efficiency. Last year, they were talking about spending billions of dollars, and they did that. They lost $13 billion building out the quote-unquote metaverse, which almost nobody has ever seen. And this year, they're deciding to be a little bit more efficient, and that's certainly something Wall Street welcomes. Now, in terms of those VR headset, we saw that PlayStation cutting the output of theirs. So it could mean one of two things. It could be that Meta's offering in the VR headset space is so good that a competitor like PlayStation isn't able to generate enough demand for theirs, even at a lower price. I think theirs was like maybe a $550 product. I believe the Meta Quest is considerably more expensive than that, at least on the higher end. So it could mean that. The other thing that it could mean is there's just not a lot of demand for these headsets. And so we'll certainly see that play out over a longer period of time. But here was a key victory, probably flew under the radar a little bit with Meta, but they were allowed by a judge out here in California to buy a VR company called Within, and that is a blow to the FTC and Lena Khan. If you've been following the channel for any length of time, we started talking about this late last year. The trial, I think, was the first or second week of December. It was for a $400 million transaction, and the FTC's allegations were if Meta is able to buy a $400 million VR company, they'll eventually acquire their way to a monopoly. And thank goodness this judge out here in California had a little bit of sense to him, saying that if you're going to charge a company with a monopoly, they actually have to have the monopoly now. You can't allege that they will acquire themselves into a monopoly, especially into something like VR, especially into something like the metaverse, where there really is no dynamic player and dominant player in the space. So hopefully more rulings follow when it comes to this. And maybe this causes this lady to pump the brakes on some of this other stuff as we get to Amazon and Google. It appears probably not. Now, moving on to Apple. Start of the week at 144. Stock reported their earnings yesterday, and it kind of languished. It kind of bounced around unchanged, but found momentum during the regular trade as the stock went up 2.44% today and up over 6.6% for the week to end the week at $154.50 per share. Apple's earnings came in, and they really weren't obviously that good. Now, the expectations had been reined in over the last 3 months as you had shutdowns in China and impacts on the supply chain. There was also a large amount of foreign exchange impact on this company as well. I mean, a dramatic, I think it was like 8 points of FX impact on the revenues and the earnings on this company, to where they actually would have actually grown in the vast majority of markets if it wasn't for those FX headwinds. Now, those FX headwinds are headwinds now. I don't think enough macroeconomists are really factoring that in towards the back half of the year. Again, nobody can necessarily predict the exact direction of the dollar, but if the dollar continues to weaken against the rest of these currencies, that will offset some of the fears some people have that we're in a quote earnings recession towards the back half of the year, because it is a headwind now, but it becomes a tailwind towards the end of the year as you start lapping those FX year over year numbers. And then on top of that, if the dollar is actually weakened against that, it is a strong tailwind for revenue and earnings for the companies. We'll see what happens with Apple's. Now, Apple's next important acoustic updates, this relates to the speakers, more importantly, probably the headphones as well, won't happen until 2024, according to some analysts. This includes, I think, a key product here. These little speakers, they're great. Okay, I have two set up in this room. I think they're awesome. If you like that type of thing, it's a good product, especially if you're in the Apple ecosystem. I think the breakthrough product is probably a lower cost version of the AirPods. Maybe some that if you can get them in that kind of like $99 to $129 price range and still make, you know, your 20-30% margins that Apple is used to, that would be a product that would, you probably actually would see that not necessarily move the needle on the top line, but certainly in the wearable segment for Apple, certainly would move the needle. Now, Apple is likely to unveil a foldable iPad next year, according to the top analysts. I think we did a story on this last week where it was like unlikely. So we'll see what happens. Anytime with these Apple rumors, they're certainly testing this out. Internally, they probably have mock-ups and they probably have actual working devices, and they're just testing it out, and we'll see. The interesting thing about iPad, not related to the story, that was the one business unit that actually grew year over year. You saw PC shipments down, iPhone shipments down, wearables down, services ticked up a little bit, but in terms of your actual hardware, iPad was the only business segment that ticked up. Now, the White House seeks lower United States credit card late fees. I applaud that, but also app charges as well. We'll see when this rolls out. I haven't seen any formal announcement on that, but obviously this goes after Google and Apple as they charge a 30% quote unquote tax in the App Store for most transaction. That obviously flows right down to kind of the top and bottom line for these companies. And so we'll see if the White House and the political, there's a lot of pressure on these App Store fees. And I think in some cases, some analysts and maybe even some investors kind of factoring at some point, this is probably going to be either reduced. The 30% is going to be largely reduced or maybe even eliminated to a certain degree. And so we'll see the political pressure keeps moving on that front. Now, Senator Bennett asked Apple and Google CEOs to ban TikTok from its App Store. If either one of them had a sack, I would honestly just ban this darn thing, especially if you're Google. You have far less ties to China than does Apple. I can understand Apple maybe being a little more cautious there since most of your products are made in the country of China. But Google has, you know, they got some connections in China, but less than Apple. Neither of these companies will do this, and we'll see there's a lot of pressure on TikTok. And so we'll see the fate of TikTok going forward if there's a full-blown ban, or I believe under former President Trump, he wanted it sold to a conglomerate maybe of United States investors. We'll see if anybody has the political willpower to push that through. Apple will no longer have a design chief after a longtime exec leaves the company. Now, this executive was there for a long time, followed in the footsteps of Johnny Ive, who left, I believe, either last year or it looks like maybe in 2019. And I'm not, trust me, I'm not an not breaking any news here. I'm not an industrial designer. I'm not exactly sure if kind of, a 20-year, 30-year type executive of industrial design, are they still on the cutting edge of this? Maybe and I'm just theorizing here, but maybe what Apple is seeing is, you get these younger, less experienced industrial designers coming out of the Stanfords and the Harvards and those types of things. And maybe they have fresher and better ideas than having some design exec that has been there a long time. I don't know with Apple, but on a company that is based a lot on design, it is, I wouldn't necessarily say concerning to me that they don't have a design chief, but I'm curious to what direction they go in over at Apple. If they just continue to just lightly iterate on the designs that they have, or do they try to go more drastically in a direction that they've never been before? Certainly as a longtime exec leaves, I actually think that it could mean that they're going maybe into different directions with a fresher set of ideas. Moving on to Amazon, start of the week at $100, and despite being down over 8.4% today alone, the stock finished the week actually higher, up over 2.5%, finished the week at $103 and nearly 40 cents. That's after the company reported their earnings yesterday, and they weren't bad. If you look across FAANG in terms of just straight top-line revenue growth, I believe Tesla, if you include Tesla and FAANG, which we do here for the purposes of this show, but Tesla is number one. If you don't want to include Tesla, well, actually Amazon at their 8.6% revenue growth, most of these companies actually saw a negative earnings growth over the last year. And so from an FX perspective as well, Amazon would probably been a couple of ticks higher, revenue coming in at $149.2 billion. I got a great question here on the channel comments of my Amazon video, which I thought was pretty good. Got a lot of good comments on that video, if I just say so myself, compliment my own video. But somebody asked me a question like, what would it take? Amazon is essentially kind of a 1A, 1B type holding for me. It flip-flops with Apple. If Apple is doing well, it overtakes Amazon. If Amazon stock price is going up, it tends to be, they're basically almost even. Somebody asked me, what would it take for me to sell my Amazon shares? Basically sell out, like I'm done with this company. Well, it would take a rapid deceleration in this revenue growth. Okay, we talked extensively on the video about cutting costs and all those types of things. I won't get into that here. Most of you understand that thesis and my belief of what Amazon needs to do there, but I would need to see a deterioration in the revenues, like go negative, and have it not be maybe a macroeconomy recession type thing, but maybe a competitor kind of upstarting or Amazon kind of falling on its face. We're not seeing that. Top line revenue is still really good. If you look at the AWS business, the ad business, the third party sellers, the Prime membership, and even kind of the other category, which is kind of their new streaming content category, this company is growing double digits really across the board. They just strictly need to get more efficient from a cost perspective. If they're able to do that, this stock is likely undervalued, if I do say so myself, considering I own a fair amount of it. Now, One Medical dropped on the report that the FTC is hiring outside economists on that Amazon deal. This is a $3.5 billion takeover deal that Amazon made several months ago. And so the FTC is spending your taxpayer dollars to hire economists to look into the deal to potentially file some kind of lawsuit similar to the Within deal with Meta and numerous other deals that we've seen. Now, unrelated to that, the FTC is also prepping for a potential antitrust suit against Amazon. Now, it is unclear. Nobody really knows based on this story. No one really knows which segment of the business in particular is being targeted as anti-competitive. So we'll see what direction this goes. But if anything is certain, likely going to come down. Now, cost cuts. Question mark. Minimum purchase requirements raised in Amazon Fresh. So this is another example of how Amazon, while they do a lot of things that are customer centric and good for you, maybe the Prime subscriber or the buyer, It's not great for the shareholder. And so what they are going to do is via Amazon Fresh, if you had grocery deliveries above an order of $35, they would deliver them for free. What they found is they're probably going to lose a lot of money on that. They changed it to $150, which I can't tell you the last time I spent $150 at the grocery store. I would have bought, food for 3 weeks if I had to do that. So we'll see how this impacts demand for this type of service, but it certainly would help some costs. Now, Whole Foods, which is obviously owned by Amazon as well, presses suppliers to cut prices. We're going to just see this across the board. Let's see if Amazon is able to drive some efficiencies and drive suppliers and drive costs down so subsequent quarters look a little bit better from an operating perspective. Moving on to Netflix, started the week at $358. Has there been a week over the last 2 months that this stock has actually been down? I mean, every week it seems like this thing goes up and up and up over 2% to finish the week, close to $366 per share. World Wrestling Entertainment, otherwise known as the WWE, gained as the CEO sales process said it only would take 3 months. And now it appears they have Vince McMahon, who I believe is maybe a second or maybe even third generation owner of this company. It looks like he's on board to sell this thing. Obviously, he's getting a little bit older than he was maybe 10, 15 years ago. He's had some personal problems and allegations that have come out and maybe is driving him to the sidelines and maybe driving him to sell this. We mentioned this with Netflix because they're rumored to potentially being a buyer of this property. I think it's an interesting property. You got something that's worth about $6.3 billion. We would assume there would be a premium for the shares, although the shares have rallied, really over the last year or so, kind of in anticipation that this company would be sold. But my guess is, if you have Disney involved, if you have Netflix, if you have other parties out there as well bidding on this asset, well, yeah, you're probably going to have to pay a premium, but certainly something that Netflix could pull off. They certainly could finance it with the stock. They've got a little bit of cash on the balance sheet over at Netflix, so we'll see what they decide to do. Would bring in an entire new audience, an entire, I wouldn't say new type of content for Netflix, but certainly an interesting form of content. And so we'll see what happens with the WWE. Looks like that company is going to be sold over the next 3 months. Now, GM and Netflix are partnering on promoting electric vehicles. Now, you're probably thinking that GM is going to pay Netflix to product placement their electric vehicles inside of movies, and you're wrong about half of that. This is not your traditional product placement arrangement because GM is not, I repeat, GM is not paying Netflix for the EV exposure. Instead, the progressive management over at Netflix wants to be a part of a shared commitment to promoting EVs. I don't know how this benefits shareholders, but I'm being a little facetious or maybe exaggerating a little bit. It does appear that there's going to be a Super Bowl ad that is going to highlight the partnership. Also, I don't necessarily know the financing of running a movie or running a TV set, and that maybe if GM is giving these vehicles for product placement, they're not paying a fee over and above that, but that does maybe reduce the cost of production and those types of things. And then if GM is willing to maybe foot the bill for either all or part of a Super Bowl ad featuring this partnership, well, obviously Netflix is benefiting to a certain degree. Now, Netflix is going to lay down the law. This will probably hit the bottom line at some point for Netflix, as they're going to crack down on password sharing. No longer will Netflix subscribers to be able to share an account with, say, grandma who lives in another state. So if you've been sharing your password with Netflix, that is going to get cut off here very shortly. Moving on to NVIDIA. Talk about a stock that just seems like it just keeps going up. Started the week at $199 on the dot, finished up over 6% higher to finish the week at $211. Year to date, NVIDIA is up 47%. My goodness. Now, over the last year, it's still down 16%. But boy, you've had a monster move there. Now, we did get AMD earnings earlier this week, and they were actually pretty good over at AMD. You certainly can see from Intel's business declining, it's really just flowed over to AMD. And I believe off the top of my head, NVIDIA reports their earnings on February 22nd. Don't quote me on that, but it's likely during that week. My guess is you're going to see some flow to that as well, and we'll get some insights into NVIDIA, which launched new graphics cards over the last 3 to 6 months that were very premium priced, and we'll see the sales and results of that. Moving on to Google, this company like Amazon, Apple, and Meta also reported their earnings this week. And despite being down 2.75% today, nearly $3 per share, the stock started the week at 97.60. So it actually finished higher, much higher, up over 7.3% to finish the week at 104.78. Again, that's on the heels of those Q4 earnings, which came out after the bell yesterday, just flat on that revenue side. They did miss expectations. We didn't get any kind of like rosy guidance for the upcoming quarters. You saw YouTube ad revenue actually rapidly decline year over year in a fourth quarter, which seemed kind of odd. We saw lower profitability, lower basically everything over at Google. And so it's definitely going to be a critical next 6 to 12 months. I talked about it extensively on my video about Google, even questioning, do they have the right leadership in here? And I think we're going to find out over the next. I'm certainly willing to give Sundar Pichai 12 months to figure this out. But if we're sitting here a year from now and Google's growing their revenues by 1% and lowering their guidance or having operating margins and operating profits continue to decline, well, he needs to go. And so we'll certainly give him 12 months, but the warning shot has been fired. Now, they are feeling the heat over at Google as that ChatGPT competition is intensifying and Google is testing new AI products. I mean, they need to go full blast on this. And the company is set to invest $300 million in an AI startup called Anthropic. I believe that's how you say this. Now, this company appears to be about a $3 billion company, as this $300 million investment from Google appears to be about a 10% stake in this AI company. They have created a chatbot known as Claude that is similar to OpenAI's ChatGPT. However, Claude has not been released publicly. Again, if you haven't checked out ChatGPT, I believe there's a paid version now, but you can go there and use it for free. This is cool. It's really neat, but it's not revolutionary, okay? This has been around. If you go back to IBM Watson, I mean, we're talking years ago, 3, 4, 5 years ago, you have the same capabilities at ChatGPT as IBM Watson has proven numerous times, even I think on a game show, Jeopardy. So look, other companies are going to be coming right down the pike on this one, and that's why I gotta believe you gotta have good leadership over the next 12 months over at Google, because Google can position themselves in here. And here's the reason why, is because the company is going to use the cloud computing resources of Google. Okay, all these AI chatbots, they require a ton of server and kind of cloud space and cloud storage and really a lot of server usage. Okay, there's 3 companies that really do that: Microsoft, Google, and Amazon. So all 3 of those companies should take a leadership position in this, because you don't have a chatbot without Google, Amazon, or Microsoft behind you from a server perspective. So these companies got to move very quickly, and it looks like Google is trying to do that. Now, the company is set to hold an event next week to discuss the using of the power of AI. This will be streamed here on YouTube on February 8th. I will likely be able to tune that in, and we'll bring that to you on next week's show, at least the highlights. Moving on to Microsoft, started the week at 245, a week off this company reporting earnings, and it rallied up over 5.4% to finish the week at $258 and some change. Now, Activision Blizzard, which hasn't been formally acquired by Microsoft yet, agrees to pay $35 million to settle a workplace complaint allegation. More news on Activision Blizzard is a Chinese game developers are said to give positive feedback on Activision and Microsoft. I think the Chinese regulators are the ones to easily woo and get over. It seems like it's the ones in the EU and here in the United States that are a little bit more difficult. Maybe they hold out for a little bit more bread money. Microsoft said to receive a formal statement of objection from the EU on that Activision deal. It's my understanding, I'm not as familiar with the regulatory process in the EU. They have it's similar to here in the United States, but it's slightly different. It looks like they're going to basically unseal some objections. It's kind of the starting point in some negotiation, and then it's up to Microsoft's job to appease the EU, and then on top of that, here in the United States and other parts of the world. Now, Microsoft may incorporate a new version of ChatGPT in the Bing search engine in the coming weeks, and why not? over at Bing. Okay, it's like a single digit. I think it gets 3% of the world's search engine traffic. That's why Google has to be a little more careful when it comes to integrating something like this into search. They obviously get 90 some odd percent of their business from online advertising. Bing and Microsoft, they got nothing to lose here, man. If they start picking up share in this type of thing, it's great. And look, I advertise a lot on Bing, and so I actually advertise more on Bing than I do on Google, and so I'm curious to see how this works out and if there's any advertising opportunities that come forward in the coming weeks ahead. Moving on to Tesla, start of the week at 174.50. Boom, this stock rocketing up over 8.8%. To finish the week very close to $190 per share. In fact, in the after hours, that is what we are seeing. Tesla stock gain this week as a sign price cuts appear to be spurring demand. And it's really interesting to me that people are actually seeing this because, look, Tesla vehicles were in strong demand before the price decrease. And if any of you, and I'm sure many of you out there tuning in, have attended at least one Economics 101 class, and when something has relatively high demand already and you lower the price, well, guess what happens to the demand? It's not going to go down. Yeah, it's actually going to soar. And on top of that, you get these tax credits as well, which wealthy Americans that pay taxes are probably going to line up and want to apply for their next year's taxes. Tesla sells 66,051 China-made vehicles in January. That was up 10% year over year, as again, those price drops in China also working for the company. And Tesla is said to boost their output in Shanghai plant for the next 2 months to meet that demand that is surging the shares, as those next quarterly earnings probably are going to be pretty good, at least from the top line revenue side. Okay, when you cut your costs, we're probably going to see a little bit of deterioration in the profits or the operating margins. But look, this company clearly is more valued on the top line than it is on the bottom line. When you look at like the forward price to earnings, I mean, you're trading at 47 times earnings. So clearly investors are comfortable with a low amount of earnings. They are more excited about revenue growth. Now, Tesla updates on their CapEx spend and their autopilot probe. They gave you a range of CapEx spend for the next year or so from 7 to 9 billion over 2024 and 2025. That compares to last year where he did 7.1 and 7.5. So CapEx is just going to continue to tick up. And I don't think there's any shareholders out there that really are bothered by that, considering the company is continuing to ramp things up from a production perspective. Moving over to the technical segment of the show, kick it off with the S&P 500. And we talked about last week. So there's this little green line. I mean, I just drew in a red line for no reason, but we've had this green line, which represented the previous highs that we made back here in December. And I talked about how last week we were actually, I think we were like right on them or we were just below them. And I talked about how you'd like to see some follow through this week where you had the rally up above that. And look, that's exactly what we got on the S&P 500. You rallied above that. That creates a higher set of highs. It's being confirmed by a higher set of lows. This is the beginning of an uptrend. Whether or not it turns into a new uptrend, whether or not these are the lows back in October, anyone's guess. Look, I'm not going to sit here and pretend I've got, Miss Chloe and I've got a crystal ball, but what it does is it actually increases the probability that these were the lows back in October and this is the start of a new uptrend. Now, don't be alarmed if next week is a bad week on the stock market and we pull back. We could pull back rather significantly. You could pull all the way back to, eventually the scene of the crime. I stole that from a commenter here on the channel. But if we return back to the scene of the crime, which is this black uptrend, which the stock market has just been making lower set of highs all along the way, a back test to that is actually kind of perfect kind of technical pattern. That would be a 6% drop on this one. Now, further than that, I wouldn't be like thrilled, but I wouldn't be alarmed as long as we don't pierce through the lows that we made back here in December. That would take you another 9% down. Again, I'm not anticipating the stock market moving 9% in a week, but I'm kind of giving you, 2, 3, 4 weeks, maybe even a quarter or two view into the future. We're looking for these levels to hold. We're looking initially for 3940 on the S&P 500 holds, and then lower than that, right around 3800. You'd like for that to hold. If neither of those levels hold, I'd be almost dead certain you're coming back down here to the lows, and you're probably actually going to go below them, because it would basically just mean this was a fake out kind of pump fake. So the next couple of weeks, and maybe the next, next couple of months, it depends on how long this plays out. My guess is in this market that we're in, this will play out over the next, in the month of February, maybe into a little bit of the month of March. We're going to find out if this level down here at 39 holds, if this level down here at 38 holds, if it even gets tested, and we'll see what happens. The other scenario is you just continue to move higher, which in my opinion seems unlikely, but I guess it is a probable, it's like a non-zero chance that it could happen. I just see that as improbable, that you just continue to rally the highs. The next stop is all the way up here at 4,300, another 100-point higher, another 3% essentially on the S&P 500 if you retest these highs that you made back in August of 2022. Seems improbable. I think the more probable outcome is we start having pullbacks in these markets. I wouldn't be necessarily concerned. If you are of the belief that things are going to get worse, I get these comments all the time, and you're crazy for buying stocks and things are going to get worse. You should have been selling this week. You should be selling as soon as Monday when the market opens next week, if that is the belief that you hold. Moving over to Meta, we created a gigantic, we're talking about a gigantic gap in this stock chart. We'll see that what it is from a percentage perspective. It is about a 16% gap in the stock price. So whenever you see these types of gaps, certainly if you held this stock, it was great. I bought this stock. I actually thought I bought it at this black line at 125. I checked my account. It was higher. I bought the stock at like 140 something. And I don't remember if I got it here or here, but needless to say, I saw it go up about 20% this week, and I did take some profits on Meta. It was about like 13 shares or something, nothing big, but you actually blasted through two levels of resistance. There was resistance here at 162, and there was resistance here at about 179. So that should provide some cushion on the way back. Gaps tend to fill on technical charts. It would not alarm me one bit if Meta pulls back, and it pulls back to like 179 next week. Maybe over the next month, it comes back here to 162. I would not be concerned. You pull all the way back to 153, fill the gap, not concerned. You could pull all the way back to like the 130s on this stock. Still not concerned, because this gold upper trend line is really what we're looking at, and you'd want really this black line to hold all the way down here at 125. As long as this stock doesn't get down below 125, I actually think these dips, if this stock makes them in the coming months, actually can be bought. Not necessarily heavily in the beginning, but once this gap fills, that's kind of the signal from 151 down. That is your signal that you can potentially buy the dips, again, if you believe in the long-term story fundamentally, or certainly from a technical perspective as well. Now, if the momentum stays in this stock, we should meet some resistance up here at 220. There's another level higher than that at 240. And here's your other gap. If you start breaking, if the momentum stays in this stock, I think you just get back in, because there's a magnet up here. We saw this with Netflix stock, a couple other stocks that we've been looking at. When there's this big gap up here, that's also a magnet. So right now, Meta is on kind of what I would call a teeter-totter. It's either going to fill the gap below it, and I think that's the high probability. The lower probability is it fills this gap up here. I tell you what, if Meta fills this gap up here, we are going to be off to the races on the S&P 500, and the rest of these stocks will be off to the races. So don't feel bad if you miss that type of move in Meta. There's every other stock is probably going to be going up as well. Moving over to Apple. Now, again, this stock was right here after reporting earnings, was at 150. It was down, it was up, it was down, but it actually bursted through right through that technical level. Now, just literally a week or two ago, stock was down here under $137 per share. And we talked about how it was going to be 137 was going to be resistance on that way up. Well, guess what? We blasted right through that. And then there was going to be some resistance here at 150. Boom. We blasted right through that. There is some overhead resistance. You see this, the stock came right here to about 157, actually 157.38 today, and basically kind of retreated here. So we'll see with Apple, you've got to move maybe to the top of the channel. Momentum stays in these markets. You probably got another 5% in Apple, but all that would do is confirmed that this kind of sideways down channel that the stock is in, it's just simply there. You really need to get back above these highs that we made back here in August. So this thing would need to go up another 10% to really confirm that you're kind of out of the downtrend. Although this is a very shallow type move. Other stocks that we're looking at are far more steep than this. But you'd be going off from 40% off the lows. That's more than a bull market. So Apple, if the momentum stays in this one, probably going to lead the rest of the markets higher. Moving on to Amazon. Talked about it on our show yesterday. We talked about this with Amazon, the fact that it got rejected up here. The stock started walking back. I said high probability that it's going to walk back to the $100 level. From a technical perspective, there is some support for the $100 level at Amazon. It's also a back test of this upper channel line. We'll see if this holds. I'm not convinced this level holds with Amazon. I think we probably come back into this green box, and there's your opportunity. If you buy into the longer term thesis over at Amazon, and probably the shorter term thesis is if this company can continue to maintain revenue growth and they can convince investors that they're going to shed cost and increase operating profits at some point, well, here's your opportunity to continue to accumulate shares, because since 2018, investors have been widely accumulating the stock between, we'll call it 85 up to about $100 per share. Moving on to Netflix. This one just continues to power higher. It's not moving as aggressively, but we are in this upper channel. There is a small gap up here between, we'll call it 450 up to about 507 on this one. And that's, I mean, there's no reason to believe that's not where it's headed, but it's not going to be easy. You're going to have to get through this 390 level, call it 400 on Netflix. That'll be the key test. If you get over 400 on Netflix, yeah, you're filling this gap. And so, I mean, this doesn't look big here on the chart, but it's 450 to like 530. So that's a decent move. And we'll see what happens with Netflix. Again, very similar to when you make this type of move off the lows, this stock could pull back dramatically, and you're not really that concerned from a technical perspective. In fact, you're more looking to buy it than you are anything else. Moving on to NVIDIA. This one is just looking so good from a reversal pattern, and we're seeing this with AMD. We're seing this with really AM. If you bring up an AMD chart, AMD is like right here where NVIDIA is in a little more advanced stage of this kind of like V-shaped recovery. We'll see if this maintains, but right now there's no reason to believe this stock won't maintain this uptrend. And I tell you what, in NVIDIA, if you get some kind of pullback in this stock, it is a buy. You buy it at the bottom of this channel. You set maybe a stop loss, $5 under that, and that would be how I would play NVIDIA. NVIDIA is just in a beautiful, beautiful uptrend. Google's looking like it's trying to pull an NVIDIA very early type. Again, you're looking for the same type of formation that you just saw with NVIDIA, maybe not quite that steep, although Google made a very steep move today. Off the lows here at about 86, it powered through a resistance level here at 99, and it kind of touched this level at 106 and is now kind of hovering on it. Even a pullback on Google is not much of an alarm. You should have some support about $5 lower at 100, and even if it pulls back lower than that, back into the kind of the low 90s, it's not really concerning because it appears from a technical perspective this stock is moving higher. And then if this company can get in that AI conversation and be viewed as a leader, similar to how Microsoft is being viewed a leader, well, it probably means good thing for the shares. Speaking of Microsoft, also very similar position, like an early NVIDIA kind of move. And semiconductors tend to move, in advance of everything else. I mean, it's high, not breaking any news, high beta type of stock. Google, it appears it wants to make that type of formation. Microsoft's slightly more advanced than that. We've broken out of this red channel line. I'm not going to delete it because you do tend to see kind of back test to that. I could see this one back testing all the way to the 230s, and I'm probably going to buy more Microsoft if that happens. There should be a stop here at 250, about $8 lower. And again, down here at about, we'll just call it 235 of the next, really 3 or 4 weeks to get a pullback to there. I think that's a buying opportunity. If you do break through there, well, it's look out below. So if you don't like risk, if you don't like maybe risking some capital, which if you don't like risking capital, maybe you should hire somebody else to manage your money. But that is certainly possible as well with all of these stocks, that this is just a temporary move and the bears are going to get back in charge and we're going to retest lows. And if we do, holy crap, you're going to retest probably 190 on Microsoft. So we'll see what side of the fence it decides to go on. I don't mind buying these stocks at 230 and being wrong, because it's my belief the rest of these stocks will eventually start to look like Netflix, which is up 117% off the lows. Some of these stocks will start to look like Meta, which is up 110% off the lows. Well, I'm not necessarily expecting as dramatic of an increase in like a Microsoft, Google, or an Amazon. You certainly can probably expect about half of that going forward. Now, speaking of a high volatile and high beta type stock, let's clean this up a little bit so you can see what's going on with Tesla. Speaking of V-shaped recovery, holy moly, we've got it with Tesla. And it is, I mean, it is a V-shaped type of recovery. So you'd expect this to give it back at some point. But I tell you what, Tesla powered through a area of resistance. I thought like 179 would be a little bit harder for Tesla to carve through. Doesn't appear to be the case. So if this company continues to get strong momentum on those price cuts announcement, you continue to see strong demand for the company out in China, maybe some positive news and momentum here in the United States, you are probably going to retest this area a little bit higher at 235, higher than that up here at about, we'll just call it 260. It's probably a little less than that, but you would make this type of move. And if you make this type of move in the stock, you are just really confirming these lower highs. This would be an area where you take profits, certainly from the shorter term on Tesla, if that is something you're interested to do. If you want to eventually eliminate this downward trend line, you need to pass these highs back up here at $300 per share, which means this stock would need to rally another 70% or more to cancel out these highs up here. Seems like an incredibly tall task, except when you look at the Netflix, the NVIDIA chart, the Meta chart, it is certainly possible. And a lot of those companies, particularly when it comes to NVIDIA, are wildly overvalued from a fundamental perspective. So it is possible. The other thing is possible is we get rejected here at Tesla, but you wouldn't really be concerned unless, again, you pierce through these lows that we made back last month. That would be nearly a 45% decline. Anything south of that, like a 35% decline, will certainly be painful, but will simply just be a resumption of the downward trend that you're in. So we're certainly monitoring Tesla over the next, I would guess, over the next 8 weeks or so. Can it actually push higher than this trend? Again, that would be about a 60% move from where the stock is now. If it is able, and it sounds crazy to say, oh, the stock's going to rally another 60%. But when you look at Tesla year to date, stock is up 75%. So the stock can make these types of moves. And until it proves that the momentum is over, as an investor, and certainly as traders, you would have to assume that that momentum is going to continue. We'll see if it does. Certainly here on the channel, we'll be here to bring you every bit of that. That was our busiest week of the year so far with the FAANG stock earnings, and we'll certainly be back to cover them next week as the news cycle resumes for most of these companies. And then obviously a couple of weeks away, we'll cover NVIDIA. Have a wonderful weekend out there. We'll see you again next week. Thanks for tuning in. Good luck with your investments.